Equity, mate.
I will say this about investing. Everything you do learn is cumulative. What I learned at 20 is useful.
Equity.
Welcome back to another episode of Equity Mates, and boy, do we have a bumper episode for you today. If you've just joined us for the very first time, welcome. My name is Bryce, and as always, I'm joined by my equity buddy, Ren. How are you?
I'm very good, Bryce. We're getting towards the end of the year. We're about to take a break and then get into our summer series where we deep dive on 12 stocks with 12 experts. But we always bookend the year with one expert. He was our very first guest on Equity Mates all the way back in 2017. We sat around a table like this with one microphone between us. Now we're surrounded by cameras and lights and microphones. But Andrew is as insightful as ever. Andrew Brown, the Executive Chairman of East 72 Dynasty Trust. Welcome back to Equity Mates.
Thank you, Ran, and good morning, Bryce.
Good morning, Andrew. Now, the reason we have you here, if you have just tuned in, at the start of the year, it is a tradition. We sit down with Andrew and we do bold predictions for the year ahead. And to close the year, as you said, Ren, we bookend it with a wrap-up episode. Now, we've just come off the back of Ren and I wrapping up our bold predictions and stock of the year. Now it is Andrew's turn. 14 predictions to get through today. How do you think you went from the top, Andrew?
Not as well as last year, which was pretty exemplary.
Yeah.
We did 10 out of 14 last year, which is
Yeah.
pretty good in these things. And whilst I was extremely trepidatious re-listening to the episode broadcast on the 16th of February, it's perhaps a little better than I thought. So,
Yeah.
But
Nice.
there's lots of insight
Great.
coming out of each of the things, whether we were right or whether we were wrong.
Yeah, and I think the fact that we return to the bold predictions is important because a lot of financial media will throw them out at the start of the year. Everyone loves a prediction and everyone loves a stock tip, but they'll very rarely return to them. So we appreciate you coming back and facing the music
Yes,
however they went.
I'm not a Greek economist, yes. So,
Well, let's get stuck in. We'll take a listen to Andrew's first prediction.
But I think what it shows, if nothing else, and this is prediction number one, and it has a real implication for what you guys listening and girls listening have to do. Volatility is going to be a major feature of 2023.
well, I think volatility, a major theme of 2023, I think that was pretty much spot on.
Yes, I think so.
I mean, obvious things. Let's start with the US 10-year bond, which was basically around 3.5%, I think, in February. Obviously, it touched 5%, and in the space of 1 month went from 5 to 4.25%. 10-year bonds don't do that generally. The stock market itself, if we take the US market, it fell 8% over a 3-month period from about the end of August to the end of October. And then, of course, as many of you would be aware, just rocketed up roughly 10% in November, simply because maybe it was a bit too cheap in October. Look, we had a bit of help from that. We record these things when the bold prediction starters are usually done in the first or second week of February. And by the time we'd done it, as we outlined in the original recording, the NASDAQ was up 14% above the year end in 5 weeks.
Yeah.
So, and the ASX was up 6.5%. So volatility continued to be a feature. Why? Simply because obviously you've had a change in US monetary policy. You've had subtle changes in US monetary policy as well. So the obvious change of quantitative tightening, in other words, interest rates being pushed up and then reaching a level where most people think there's not really much more scope for short-term rates to rise. What's been happening since then, of course, is the US government's been spending like drunken sailors, and they can't finance their deficit without the help of the Federal Reserve Board. So what you've got one arm of government issuing bonds and another arm of government buying most of them. So it's really quite fascinating, and that type of environment just creates volatility. Add to that the sort of ongoing bits and bobs of Russia, Ukraine, but more pertinently, obviously, you've had disruption in the Middle East because of the events of the 7th of October. You say the oil price has been extraordinarily volatile over the course of the year. The US dollar has continued to be extremely strong, so that's played havoc with quite a lot of commodities. And it's clearly, there have been other things sort of bubbling along underneath in the background. Changing Japanese monetary policy. So so the yen's been, sort of, weaker than me moving furniture. It's just, and so the Japanese market's been a crackerjack market over the course of this year. Fly 3 hours south and it's been one of the worst stock markets in the world, which is China and Hong Kong.
Yeah.
So, there's been real volatility and a little bit more divergence than you might imagine, okay, but we'll come to lack of divergence elsewhere in this pod.
All right, well, let's move to prediction 2. This one was a bit alarming at the time.
Prediction number 2 is why might volatility be a feature of 2023? There are all kinds of economic things which we can get onto in a minute, but I'm going to suggest to you one of the boldest predictions I'm going to make is death.
Wow.
Okay, and it's not that bold to assume that someone will die. That's a fact of life. But you named a few people, critically important people around the world: Joe Biden, Vladimir Putin, President Xi. Now that was bold. Or Rupert Murdoch. 4 old men that seem to control most of the world.
I'm going to give myself a quarter on this one.
Of those 4 men, I think I might have missed a news.
Actually, sorry, I'll give myself an 8. Okay. So obviously
Interested
3 out
to
of
hear
4
you argue
are
this one.
categorically still alive and in their jobs, which is the important thing. One of the 4 is very much alive. I think even may have another new girlfriend as we speak at 91 years old, but obviously did sort of retire, which is Rupert Murdoch.
I think directionally, there are certainly deaths, like Biden's age is killing his political fortunes.
Correct.
And
Didn't Putin have a heart attack?
Allegedly,
Supposedly.
yeah.
he also had
Absolutely.
like a stroke, and
Yeah.
there was some story in the Daily Mail or something that he shit himself in a meeting. So, I don't know, he's not healthy.
I don't think he's healthy. So Murdoch stepping away was obviously, I don't think it was that big a surprise, but I was a little surprised it didn't have more impact in terms of restructuring news. Not that was negative for the shares at all. The shares have actually been really rather good this year.
It's been unbelievable.
Yeah, it's been very, very good because they were really so cheap. Of course, I didn't predict Charlie Munger's death, which, number one, I wouldn't want to predict, and number 2, it was very sad, even at 99.
Yeah, and Bryce's hero, Henry Kissinger, also died at age 100.
I missed that.
Well, just say for obvious reasons, see my Twitter feed. Henry Kissinger's not one of mine.
Yeah, he shouldn't be a hero.
Okay.
You should reject that.
Okay, I reject that. All right, let's move to prediction number 3.
My third prediction is that house prices in Australia will not bottom this year. House prices in America will bottom this year.
House prices. Took us the whole 3 predictions to get to housing.
Absolutely. I'm going to give myself a half for that because house prices in Australia certainly they bottomed in the sense of, they're up. I think if you use the CoreLogic data, they're across the country, they're up about 6% roughly in 2023. So they certainly stopped falling. I suspect they may resume some falls in 2024.
Don't say that. Bryce and I have both just got mortgages.
Why do you think I think they're going to fall in 2024? So, the US, unless you're in San Francisco, which certainly hasn't bottomed, but generally US house prices certainly did find a bottom around the second to third quarter of this year. If you use data from the Federal Reserve Board of St. Louis and other things, the average house price in the US in the second quarter of 2023 was $418,500. Dream on, boys, with your Sydney mortgage.
What the hell?
That is US, by the way, so that's what, 600. And in the third quarter, it was about 431,000. So they look as though they've actually bottomed out. And I think with short-term interest rates having probably peaked, please bear in mind short-term rates have much less impact in the US than they do here. Yeah, because it's fixed-rate mortgages. So, one of the issues with houses in the US, they don't transact. So, particularly with interest rates where they are.
So in Australia, even though according to CoreLogic, the national average is back at all-time highs, close to all-time highs,
Yeah,
you think there's another leg down?
I certainly believe there is another leg down, but we might explore that in February.
Nice.
2 months is a long time.
Yeah, it is. It is. Yeah.
All right, moving on. Prediction number 4.
Bold prediction number 4. This is not bold at all.
Great.
Okay, this
Yep.
is not bold. This is about as consensus as you can get. Okay, but the date to watch is the 17th of September 2023. Okay, so my bold prediction is when we come back at sort of Christmas time and do the rerun of what happened to these bold predictions, Philip Lowe will not be the governor of the Reserve Bank.
Right. Okay.
Okay, his contract finishes on the 17th of September and I don't think it'll be renewed.
Sometimes you just got to put a few easy ones in there for you.
That was. I don't think that warrants much comment. The only thing I did add, actually, which if you listen to the February broadcast, is I said I think they'd bring an outsider in, okay, which they didn't do.
No.
But Ms. Bullock is acting like an outsider, which I think is very encouraging. And I'm half right because, of course, her deputy, just appointed, is very much an outsider from the Bank of England.
Who is the deputy? I've missed this.
Hausler. So he's from the Bank of England, and I think that is that's really, really good. So they're getting rid of the groupthink, which the Reserve Bank of Australia was riddled with. So I think that's fantastic. So I don't think we need to spend much time on that because Dr. Lowe's continued to unfortunately make a fool of himself at conferences in Hong Kong.
Yeah, he's sticking around, isn't he?
What's he done?
Just keeps
he's
commenting.
Is he like defending himself?
He's sort of trying
crack.
to, and he's sort of making predictions that kind of like were maybe relevant 5 months ago, but
Okay.
they're not now. So go play some more golf, Phil.
Yes.
Yeah,
Nice.
yeah.
All right, number 5.
So bold prediction number 5 is the Fed funds rate will not be below 4% this year.
Nice.
Okay, it's currently above 4. It's close. It's basically
4.6.
4.6 at the
Something like
midpoint.
that.
Yeah.
And I think before you give your explanation, it's important to contextualize where we were in February because we had had a number of rate rises in the States and in Australia in 2022. And there was a lot of conversation around we're going to start seeing rate cuts in 2023.
Yes,
And so your prediction was more bold than it feels as we look back on the year.
absolutely. No, I think you contextualised it really, really well, Alec. I think that was important. I think one of the things I added to that and some of the underpinning to it was that inflation was going to level out, and that certainly happened. That's one of our other predictions to discuss. But yeah, you're absolutely spot on. People were starting to expect rate cuts. I mean, you're seeing in equity markets at the moment, the way in which significant rate cuts are being parcelled into 2024 is really quite surprising. It shows one thing, and I think it's a brilliant cautionary note to everyone watching and listening. Stock markets now are generationally obsessed with interest rates. Okay? Because we've had such a long period of time of ZIRP, zero interest rate policy, or close to it, and that obviously drove long-term asset prices. Central banks have by and large broken that. And each central banker, whether it's Jay Powell or even Michelle Bullock to a degree, are sort of really cautioning that we're not going back to that regime. And the millennials, who perhaps are some of the key people in stock markets at the moment, they basically don't believe them. Because they've grown up in an environment where we've had next to zero interest rates all the time. And they're thinking, well, we're going back to that.
Yeah.
No, we're not. No, we are not. We may get interest rate cuts, but we ain't going back to ZIRP. And people are starting to price stock markets as though we are. And they forget there's another side to this equation that we'll talk about in a minute, and it's probably one of the big things I got wrong in 2023, okay, which of course is earnings. And you can't have both. You can't have ZIRP and earnings hanging around where they are.
Yeah.
One of them's going to give.
Well, before we get to earnings, we had another prediction on interest rates back here at home.
And the reason,
Next question.
And prediction number 6 is that the Reserve Bank's cash rate will not be below 3% at any stage this year.
And I think in your explanation, you spoke about how entrenched inflation was becoming, and you saw it as more entrenched than the US and Europe.
Yep.
About 8 months later, The Economist has finally woken up to what you saw at the start of the year.
Absolutely.
They published their inflation entrenchment index, where Australia is number one with a pretty meaningful gap to then Britain at number two. So, yeah, not only were you right on the prediction, but the explanation was pretty spot on as well.
Yeah, I can say I think prediction number 6. How can I be understated about it? I think I absolutely crushed it. Yeah, I think that was that. You've nailed it, and it was absolutely, the key thing about it was the entrenchment of this. We were miles behind the curve, which was the whole rationale behind Lowe getting punted, because he got it all wrong, and contributed to where we were. So it was really a matter of the fact that I was surprised. I was surprised Lowe went hard. Then he got sort of nailed by the political backlash. And don't forget, he had 4 months at the end where he didn't raise rates at all, which is utterly, if you wanted to see why the man had to go, and he's a lovely guy, but he was just incompetent. It was that as much as anything else. So you've got this entrenched inflation. Everybody knows it's entrenched. It's not supply chain driven from Chinese dock workers not being able to work. It's totally about the demand in the Australian economy, working through the savings, and the very large savings that we have, where people have been spending it, pushing up prices, pushing up asset prices as well. And he sat there for 4 months when he knew he was leaving.
Yeah.
And, he literally did sit on his butt and do really not a lot apart from, a sort of celebratory trip around Australia and, and sort of a Morgan Stanley conference, I'm quite scathing about his performance. It really poor. And things, our cash rate, which is at the time speaking is 4.35, should have a 5 in front of it. Categorically. There's two elements, don't forget, to moving interest rates. There is the physical cost of money, which will always be dictated by the market, but you can obviously influence it by setting the base rate, if you will, at which banks can borrow from the central bank. Okay, so that's one essential of it that you learn in economics. But the other bit is about jawboning. It's about getting consumers and people and folks in the economy to kind of behave in a different manner to what they have been. Okay, and 435's starting to get people doing that. I'll accept that. But 5 would really get people doing that.
But will it get the right people doing it?
Yeah.
Like you just spoke about savings and
old
spending.
people without mortgages.
Yeah.
You have to. I mean, one of the biggest problems we've had in Australia, and quite clearly one of the biggest problems you've got in America, is that fiscal and monetary policy have been counteracting each other completely, and that's the situation in Australia as well. I mean, fiscal policy is reasonably loose because we've had big sort of inflows into Treasury from, iron ore prices, for example. And so, Treasury's had a bit more money to spend. I mean, we shouldn't be having stage 3 tax cuts that were, that were sort of legislated a few years ago. No. You shouldn't have those at all. They're directly inflationary. And so the government's been sort of pounding away spending. You can't get in a car without getting in a traffic jam because there's a crane in front of you. So we've had lots of government spending, which is counteracting the fact that it's kind of hurting, mortgage owners. And I accept the fact that, millennials who have, boomers who have cash are earning more on that cash. One of the biggest problems is we still have stupid tax policy in this country. I mean, it is a joke that you can live in a $4 million house with very little money in the bank and claim the pension.
Yeah.
Now, that's outrageous. That's just utterly outrageous, and it's outrageous against your generation. It's a disgrace that my generation can do that, and I know people doing that.
Well, Andrew, I think we've just got our social media clip for this episode, so we'll make a note of this timestamp. I guess to close out the inflation story before we move on to our next prediction, how entrenched do you think it is now?
It's still significantly entrenched because we do have these strong buffers from COVID where people did save. Some didn't, but we do have these strong buffers, probably more so than anywhere else in the world. And what that means is people can continue to spend a bit longer than they can, say, in America, where increasingly you look and people look tapped out.
Yeah.
So I think it's going to hang around a little bit longer, and our government spend is strong. We've obviously got very strong immigration, which is highly contentious, and so it should be. when you open, I mean, you don't conduct economic policy with sort of valves going maximum off, maximum on. Mm-hmm. That's how you flood your next door neighbour's garden. It's sort of, you don't conduct policy like that. So you can't let 600,000 people into Australia. I don't care where they're from.
Yeah.
It doesn't matter to me where they're from. I don't care if they're from Timbuktu, Canada, Peru. It's irrelevant. Okay. What's relevant is they got to live somewhere. And they got to spend, and they're going to spend, and it's creating too much inflation. It's creating an asset price bubble, and it's basically making the economy completely unbalanced. That's got to change. I just can't believe that, the fiscal and monetary policy in Australia for the last 2 or 3 years is just, they've just been pulling against each other. It's been silly.
What are your thoughts on the stage 3 tax cuts then coming in 2024?
Get rid of it. Get rid of them.
He's already given us a big...
They're for rich boomers. Get rid of it. They're not needed. Those people don't need them.
Yeah.
Okay.
Well, we're doing the maths on it as well. I think someone who earns $200,000 a year will get an extra $9,000 from the stage 3 tax cuts, which is 4.5%. But if inflation stays at a 5 or a 4 for years to come, it's like all that value is eroded away.
It's just, I mean, to be quite blunt, I mean, what's gone, as you probably gather, I'm actually not, the biggest kind of bull on Australia at all at the moment. I think the place is run like a, garbage tip. It's terrible. We have such insular politicians that don't look elsewhere, to get an idea as to what's working elsewhere and what should happen. It's also insular. It's 24-hour news cycle rubbish. The fact that Labor have been kicked around for potential, thinking about getting rid of stage 3 tax cuts, and there's so much political backlash if they do that they won't do it. That's criminal. That was Scott Morrison's idea, and as an economist, Scott Morrison's a really good road sweeper. You should get rid of them. Be done with them. They're inflationary.
Yeah. 100%.
Yeah. All right. Well, we're not here to talk politics. We'll save that for the politics podcast. We'll get back to finance. Prediction number 7, all about earnings.
And therefore, prediction number 7 is after a 15% correction, I think the market will end up not too far away from where it was at the end of 2022.
Well, if I crushed prediction number 6, so prediction number 7 sure crushed me.
Yeah, you didn't think about the magnificent 7, did you?
No, there are so many things that derailed that prediction.
Now, we should be clear because Australia has ended pretty much where
That's
we were.
That's prediction number 8.
Yeah, this prediction was about the US.
This was about the US. Yeah. This was about the US. Where did it go wrong? To be blunt, where it went wrong as much as anything clearly from an index construction point of view, it was the Magnificent 7, which had already started a little bit by the time we made the broadcast in early to mid-February, but that just carrying on. I'll come back to them just briefly in a second, but the main reason I didn't get it right was that I thought earnings for the 2023 calendar year were going to be weaker than they in fact are. So I thought earnings could be down around the 200 mark for the S&P 500. And in fact, they're still about 220. They were about 225 when we made the original broadcast. So they've come off 2%. Well, that's really not much. What's happened somewhat surprisingly is that the PE on the market's gone from 18 and a bit, which I thought was a bit expensive, to over 20 on 2023 earnings. 2024 earnings are still very high. They're still 240 odd plus, and I can't see that happening given that the economy is slowing. So I got earnings wrong, and that underpinned the market even at slightly high PEs. The PE story was a bit surprising given obviously the long bond was 3.67 the day we recorded, made it all the way to 5, currently around, call it 4.25, 4.3. Okay, so the PE should have come backwards a little bit and in fact didn't. So that's why, as much as anything, that's why we were wrong. It was simply because the forecast decline in earnings didn't really materialise. I just want to briefly comment on the Magnificent Seven. They're about 44% of the S&P 500. They were 55% until they rebased the index, by the way.
Yeah.
So that they were key drivers. Can I just absolutely implore everybody, these are not 7 homogeneous companies. Okay, people seem to think they're homogeneous companies because they've sort of moved a little bit in tandem. Nvidia's a rocket ship. Yeah, its earnings next year will be 10 times what they were a year and a half ago.
Why?
So it's tenfold increase in earnings because of obviously what's going on with AI and their specific group of chips. Apple's going nowhere without new product launches, producing a lot of cash flow and buybacks, but underlying profits, it's sort of got some interesting issues given it's a 30 multiple stock. Tesla's going backwards despite selling delivering at certainly 75% more cars in 2023 than they did in 2022. The margin at which they're selling them is so much lower, and despite actually increased earnings from their other businesses of energy and services, their earnings basically are on a rolling 12-month basis seem to have peaked out for the time being in the second quarter of 2023, and yet that stock has rebounded from 110 at one stage where I bought it.
Oh, you bought Tesla?
I bought Tesla, yeah.
Wow.
And it's
I remember
obviously
years ago when we were massive short.
nearly 240. Yeah, the earnings caught up with my short. That's obviously got some very interesting issues in its own right. As a business, Microsoft's been so consistent and has grown ahead of its closest peers. And I think the most interesting of the 7, quite frankly, both from a negative and a positive point of view, is Google. Or Alphabet, just simply because of how does AI impact on search and hence advertising. So that's fascinating, and of course it's not exactly a non-player in AI itself. Anybody that's used Bard will tell you it leaves ChatGPT for dead.
Really?
Yeah, that's really good.
Okay, so when it first launched, I probably dabbled in it, but I haven't used it since.
No, it's been quite good. I actually do use Bard.
Okay.
For various things. It's actually pretty good. So I'm going to give myself like an 1/8 of a point for that.
I think we can't give you a point for that. I think you did. There was a 10% fall between like July and October.
The biggest drawdown was about 10.5-11% in actually both the S&P, the Nasdaq, and as we'll come to in a second, the Aussie market.
Yeah.
All right, now they're mortgaged up to the hilt. These boys are turning into grumpy old men. So all right, no points.
No
points.
points.
All right, well, let's turn to Australia because we've just mentioned it. We don't have a clip for this one, but the prediction was, this is prediction number 8 for those keeping track, the Aussie market will go nowhere in a slightly volatile fashion.
I know it's pretty spot on. Okay, when at the end of the year last year, the Aussie market was it was about 7,000. It rose 6.5% between the year end and when we did the recording. So it's about 74.90 when we actually did the recording, and as we speak, it's kind of give or take around the 7,100 mark. Okay, so it's actually gone backwards by somewhere in the order of 5%, and it was sort of volatile in the sense of it had some, it did have a 10% drawdown at one stage, got nicely into the sort of 6,000s, before sort of rebounding in November in line with other global markets by sort of, it underperformed them, but it rebounded about 4%. So it did go really pretty much nowhere in a volatile fashion. What was really driving it? Well, monetary policy was driving it, so the banks, couldn't get into a bull market or a major bear market. Obviously, commodities were quite volatile, particularly iron ore. Don't forget, every time we thought iron ore was done and dusted, the price in China went up and the Aussie dollar was weak. So the $8 iron ore price for the big, the big producers was pretty fantastic. And then obviously small caps were horrendous, and mid caps by and large were pretty horrendous as well because they're more domestically oriented. The domestic environment wasn't very good. The domestic retail environment, obviously worsened beyond belief as the year got better. As the year got on, unless your name's Solomon Lew, because you employ really, really, really good retail executives who don't let your business go to crap.
Had the best Black Friday sale they've ever had.
Absolutely. Well, this is going to be something that people are going to struggle to contend with and still do. I know some of the younger people at my work, they've been saving their money not for Christmas. They've been saving their money for Black Friday, Cyber Monday.
Really?
So one of the young ladies who works on our desk at work, I mean, basically she had to come to work last week because there was a parcel arriving every 5 minutes. But hey, in fairness to her, she'd been really saving her pennies up to to buy an assortment, an array of things from we're not talking just clothes, but all kinds of other things. And that's really disrupting things because the deals are good. The deals are really, really good, and people are buying stuff for Christmas at that time, or they're saying, well, we're not going to bother buying anybody anything at Christmas. We're just going to, because things are a bit tight, so we're going to get the bargains that are out there. And so it's changed retail in Australia for forever, in my belief. And I'll be very interested because in 2023, things are a lot tighter for the consumer. We know that. So if they've had a nice spend on Black Friday, don't blame them, smart thinking. What's Christmas going to look like?
Yeah.
I think you've even got retailers who are usually universally bullish and stupid. Even they're not really saying too much.
Yeah. Well, I think it's just a bring forward of Christmas spending.
It is a bring forward, absolutely.
You've got to start thinking about it all being one.
And
although I do want to make the point, because everyone gets very excited about Black Friday and Boxing Day. This is UK data, but the UK consumer group Which did a study of 8 major retailers and looked at Black Friday sales. They found that 98% of the items they tracked were the same price or lower at other times in the year.
Yeah.
So there's a lot of raising prices before to
absolutely.
cut them.
There's a lot of chicanery.
Always be a little bit cynical when it comes to these things.
Really?
Yeah. Anyway. Yeah.
Alrighty, well, let's take a break, and on the other side, we're going to tackle the rich getting richer, scandals, corporate activity, you name it, plenty to cover. We'll be right back. All right, welcome back to Equity Mates. We're here with Andrew Brown, closing out the year with his bold predictions for 2023. We've done 9. Andrew's giving himself 8th of points in all sorts of different pieces. I think we've done 8, actually. We're here for the 9th. Let's get stuck in.
That's prediction number 9 is the rich will get richer. How do you play it? Think about how you play that in your portfolios.
Nice.
I'm giving myself a half a point for this because it's not quite right. The very rich got much richer. And the rich didn't necessarily get richer. Okay, and so we looked at how do you play it in a portfolio, and obviously the most obvious starting point is luxury stocks. And what I'm going to say are the run-of-the-mill luxury stocks, if such a thing exists, actually didn't do that well from where they were.
Well, I mean, to be fair to you, so I had a look at LVMH. It was
down.
It was up 30% for the year, halfway through the year.
Yeah.
You were stoked. You would have been loving it.
Yeah.
But then it's given it all back.
It's given it all back. The kind of, I mean, you got to remember, LVMH is 75 maison. It doesn't have brands, it has maison. And, so that covers everything from like Sephora, to, really, really high-end, sort of blingy, baubley, Tiffany stuff. So, it's the obvious slightly upper end luxury house, but it does cover a very, very broad spectrum. So its stock was actually down, whereas Hermes, the 10 grand handbags, it's up from 180-ish euros to 208 from when we spoke. The other run-of-the-mill luxury stocks, they're down. Things like Kering, which owns Gucci and Saint Laurent, that's down from 580 to 390. However, the really top end stuff, where just not everybody can play, the 2 really top end things, Ferrari, that's up from 266 to 358. They've just had a banger of a year with not much increase in production, but jacked up pricing and jacked up profitability as a consequence of that. Full order book for 2024.
Wow.
It is just one of the, I think it's taken people a long time to wake up to just what an amazing company Ferrari really, really is. I don't own Ferrari stock, but of course I do own its controlling shareholder, which is Exor in Italy, and that's driven the Exor price up as well because it's one of its biggest holdings. The other one that's interesting, which I introduced people to during the year, and they never knew you could buy stock in this thing, is the Société des Bains de Mer, which is the Grimaldi family's holding company of its assets in Monaco, the casino, the Hotel de Paris, 4 other hotels, and a whole bunch of really high-end apartments. And it's the high-end apartments that drive the profits in this thing. It's sort of 150 euros. 1,000 euros a month rent, sort of in some of them. So we're talking super rich. So that stock's up about 12 or 13% since we actually did the broadcast. I wrote a piece about it in our quarterly report in March to explain what the drivers were. So the very, very high end has really worked out. So I think I can give myself a sort of, a good half a point for that.
Nice. Okay. Well, let's keep moving. Prediction number 10.
Number 10, we are going to have scandals.
Oh, that's it.
That's it.
We're going to have
Tick.
scandals.
Did we have scandals this year?
Not really.
No, I'm trying to think.
Really.
Alan
Market
Joyce
scandals?
and Qantas, but that wasn't really a scandal. That was
Surely Elon was in a scandal. What about FTX?
That was the year before.
Was that last year? Okay, Binance.
that was
Binance, yeah.
They're not they're not the kind of scandals that really rock markets. They may have rocked the crypto market, but that's the kind of very.
I don't even think it did. I know
really.
you're not bullish
No.
on crypto, but
So-
Bitcoin just crossed 40,000.
Yeah, exactly. So there was nothing like I remember in the early 2000s there were so many scandals, and they did have an impact even on the Australian stock market. And we know obviously. In post 2008, there were lots of scandals as well that rocked the US market for a period. But to be frank, the kind of things I was looking at were the valuation of unlisted assets that I thought were way overblown and weren't responding properly to the environment or interest rates. Look, commercial property, I mean, there's still people who dream on in commercial property in Australia. They're absolutely kidding the values of these things. Just to enlighten the listeners, commercial property is still valued on the basis of face rent. So, even though you're only paying $600 a metre, that's because they're discounting it to you from the face rent of $1,000. So they value the property based on the face rent of $1,000 a metre, et cetera, and then they move the yield around. And that's why, Australians have too much commercial property in some of the unlisted funds. I should add, the unlisted funds, they have a lot of it, but it's not a massive portion of their asset base. If you remarked things like airports and some of that infrastructure stuff to a different market, that would be more troublesome. But it's hard to mark an airport down at the moment since you can barely get in the doors. So the yield might be higher, but they should be all doing well profit-wise.
So at the start of the year, we had spoken about how this public market valuations had come back in with interest rates rising, which is, economics 101. But the private equity funds and the big unlisted funds hadn't marked down their assets in a similar way. Throughout the course of the year, have we seen anyone start marking down?
Not as much as they should have done.
Okay.
There's certainly the marks are down. No issue about that. I mean, I know it's a public company, but they do run a lot of unlisted stuff and public sector funds are invested in that. But, somebody like Dexus, they sold a couple of buildings in Sydney and they were at 15+% discounts to what they were carried in the books.
Okay.
And Dexus, Dexus are no fools. They're smart people. They're very honest people. But, they're sort of, there's certainly an element of trying to prop the values. So I think, if anything, 2024 could be a lot more interesting on that front. But we'll get to that in Feb.
Yeah.
Maybe.
Could be a carryover prediction.
Yeah.
All right, we'll move to 11 and 12. Sasha has clipped both of these together as an FYI.
To me, so prediction number 11 is basically Dexus will go, I think. The other one, I think, is part of that whole thing in corporate activity, and I touched on this rather nastily earlier on, is I think this is the year News Corp will finally unravel itself.
So 2 predictions there. They were both. The first one was around corporate activity, and you said you thought Dexus was a player to get acquired, taken off the boards. But then the second one was that News Corp would finally unravel itself. Which one do you want to take first?
Well, Dexter's hasn't been taken off the boards. And, to be honest, I mean, the people that should be taking it off the boards are too gun shy.
Okay. Who should be taking it off the board?
It should be basically
Supers,
the not-for-profit super funds should, gang up with each other and do it. And they're a little bit too gun shy at the moment as to wanting to do that. So, and I think in fairness as well, I think the environment since we made the February recording has worsened for commercial property. It's not got better. It certainly went into a fairly deep dive around the middle of the year. So it was looking a bit more encouraging for a brief period, but then it went into a real dive. And sure, people are coming back to the office, but, it's pretty categoric now. What folks, for the time being, have got a new work pattern, maybe two or three at home, 2 or 3 at work. Everybody comes to work on Wednesdays, that sort of stuff. And, property's going to rejig. You can see it just walking around, central business district, Sydney, much more so actually than Melbourne. Melbourne, as we know, has not got past 50% people going back to the office for work. It's quite different. So Dexter's, no, that was not correct.
Let's get to Fox.
News did not unravel. Okay,
Yes.
let's make that clear. News did not unravel in a conventional sense.
For context, it's up 28% for the year.
Absolutely. But I did say it was very undervalued, and so that worked out, and I've held News all this year, and I'm very happy camper. Thank you very much. And there may be things to happen next year, but that's delayed for the time being, but not a problem. You've been paid to wait.
Love it.
Just on News, so REA Group is up 46% for the year.
Yeah.
News Corp is the biggest shareholder in
That's
REA
right.
Group. Is the 28% rise in News Corp's share price just because of REA, or is there other things?
By and large, yes, because the valuations of old media are still extremely low. I have a decent holding of Vivendi, which is the French company which owns Canal Plus, which is the French free-to-air broadcaster and filmmaker, and it owns that. It is its largest contributor to profit and cash flow. And you can buy Canal Plus and Havas, which is an advertising agency. You can buy those at below 1.25 times EV/EBIT.
Okay, right.
Okay. So the valuation of old world media and its related arenas is still extraordinarily low. I would contend that news has got things in it, most notably Dow Jones, that are not old world media at all. They're new world data. And we know what new world data looks like because just look at the share price of the London Stock Exchange Group, which basically is just really all about data. It's not about trading stocks. So, I think news has actually got a lot more in it. And so arguably, what you're hinting at is actually right, that the lag on REA is actually more acute than you imagine.
Okay. There you go.
Alrighty, number 13.
If you're looking for contrarian plays for the 410th year in succession, Brown comes back to equity mates with maybe buy gold stocks.
Okay. So
Gold.
So the gold stock in particular you spoke about was Newcrest, I believe.
Yes.
So how did gold go in?
Well, for year 410, we finally nailed it.
Yes.
Nailed's probably a bit strong, but anyway. So the ASX has a gold index in amongst all its sub-indices, like banks and things, and the ASX gold index was up about 16%. The gold price itself was up about 11 in US dollar terms. And the Aussie dollar gold price obviously was pretty good because the Aussie dollar for at least most of the year actually was quite weak. So I'm going to count that as a win. A lot of the major gold stocks actually didn't, whilst the index was up, some of them are still really disappointing, like Northern Star and Evolution are still pretty much where they were at the start of the year. And to be frank, I sort of, the prediction did sort of, look like a horse race over a mile where nobody does anything until 200 metres from the post and then they all come flashing home. And that's, of course, what happened happened with gold with the more recent rise at the year end. So, at time number 411, we got it right.
So Newcrest in particular, I was having a look. They got taken out by Newmont. Yeah. So I imagine there was probably a premium there for the acquisition.
Yeah, there's a premium. I'm trying to remember the exact thing, but there was a premium there for the acquisition. So I think, if I remember right, you probably made 25-30% on that.
Nice.
Okay, now that was our biggest gold stock. So as I say, it worked. Thank you.
I think the other half of that prediction that we didn't get a clip for was the Vietnamese stock market.
Absolutely.
Now, I was trying to Google last night the Vietnamese index, and I couldn't get a clean read, and I figured, it's all right, Andrew will have done the work.
Yes, so, I have done the work.
The Vietnamese stock market.
Yeah, the Vietnamese stock market. I can tell you the Ho Chi Minh index was about 1063 when we recorded, and last I looked, it was about 1102. However, I think I made mention of a Van Eck ETF as being the best way to play it, because it was pure public company, because some of the other ETFs have got private Vietnamese stuff in as well, and I think that's a little bit sort of more risky. And the Van Eck ETF's up from $11.96 to $13.10. So didn't quite match the NASDAQ, but it was ahead.
It's up nonetheless. All right, Andrew, to close out, we don't have a clip for it, but prediction number 14 was that your Russian stocks will trade again, in brackets, after Putin dies and Ukraine wins the war.
That's not as zany as you think, okay? Because my Russian stocks are not trading again, as you probably know. Well, they're not trading to me.
Yes.
However, my Sberbank stock is one of the best performing bank stocks in the world. I can't sell it though.
Oh, really?
It's held in what I love. It's held in an interactive brokers account, which has the wonderful, which it has an account number, has its own individual account number, everything else, and it's highlighted sanctioned account.
Oh, okay.
So they actually call it sanctioned account. But Sberbank's been really good stock over the course of 2023.
We should, just before we get too far into it, for people who haven't heard the previous episodes, at the start of 2022, you were bullish on a few Russian stocks because they were very cheap.
Yeah.
And then obviously Putin invades Ukraine.
Yes.
And the West sanctions Russia.
Yep.
And all of a sudden you can't buy or sell Russian stocks.
Correct.
You and everyone else in the West.
Yep.
And so, but since then, the Russian stock market has continued to trade for Russians.
Correct.
And so you have just this holding that you can't sell.
That's right. I have a holding which was converted from ADRs, and so it's actually priced in rubles, and the ruble's been a bit weak, although it's strengthened recently for whatever reason. But the ruble's generally been pretty weak, but the underlying stock's been pretty good. But I can't sell it yet.
Get rid of it.
So look, the prediction that the Russian stock market would reopen to the West, no, sorry.
Yeah.
But I've not been that hampered. And remember one of Warren Buffett's favourite quotes that if you buy stocks, you should be buying stocks on the basis
that if the market closes.
Yeah.
The
stock market gets sanctioned by the global
Yeah, so you can't get your money back.
Can't get your money back. So, I did a really quick calculation, extrapolating this, that and the other, and with eighths of a point here and there.
Yeah.
And I gave myself, last year we got 10 out of 14. I gave myself 8.5.
That's good. That's a credit at uni, and that's how I got through my degree.
And as I've said on socials, it's not so much, you said the market would, go down and it went up. It's why did we think it was going to go down? What changed during the year to actually render that prediction invalid? Because remember, I can't come back in June and say, I've changed my mind. I have to sit it out for the whole year. So it's a matter of actually looking. And I mean, one of the reasons I actually love doing this exercise, it's the exercise you guys should do as well. Not on economic predictions, but basically look at your portfolio. Yeah, why is it not working out the way you thought it was going to work out, or even at an individual stock level? What's changed? What's changed about the thesis? Is it the earnings are not coming through in the way you wanted? Did they not sell the poor division in the company that you wanted them to sell? Is the capital management really poor? They're not doing a buyback when they should be. All those kind of things. Do this for yourself. Do it for your portfolio. Don't do it every week. It's pointless. It's like this. Do it once a year. And have a look at, where things went wrong for you and, of course, where things went right for you.
Yeah.
Well, great way to finish there, Andrew. And with no ability to come back in halfway through the year and change, I think 8.5 out of 12, out of 14 was a decent result. So we are very much looking forward to having you back in February again. Yes, the year will be underway, but we will still sit down for our bold predictions of 2024. Who knows how that's going to play out. But as always, thank you very much. It's been an absolute pleasure.
Absolutely. And what I will say about Bold Predictions 2024, this is the most fascinating environment in the stock market for some time. So whatever we do, unless something radically changes by February, it's probably going to be probably a very, very interesting pod.
Okay.
There's opportunity galore out there now.
Nice.
Wow.
Opportunity galore. I love that tease. Well, everyone enjoy your summer. Come back refreshed, and then we'll jump into what 2024 holds next year.
Absolutely. Thanks, guys. Happy Hanukkah. Happy time of the year. Whatever you celebrate, and have a good and safe one.
You have been listening to an Equity Mates Media production. In the spirit of reconciliation, Equity Mates Media acknowledges the traditional custodians of country throughout Australia and their connections to land, sea and community. We pay our respects to their elders past and present and extend that respect to all Aboriginal and Torres Strait Islander peoples today. This podcast is intended for education and entertainment purposes. Any advice is general advice only and has not taken into account your personal financial circumstances, needs or objectives. Before acting on general advice, you should consider if it is relevant to your needs and read the relevant product disclosure statement. And if you're unsure, please speak to a financial professional. The hosts of this podcast and their guests may have positions in the companies mentioned. Equity Mates Media operates under an Australian Financial Services Licence 540697.